All right, what's going on, everyone? In today's video, we're going to talk about top-down analysis, probably one of the most overlooked parts of trading. Everyone wants to find the perfect entry, but if your bias is wrong, it doesn't matter how clean your setup looks. You're still going to lose that trade. So, in this video, I'll show you exactly how I do my top-down analysis from the higher time frame all the way to the entry time frame. The same process I use before taking any trade. By the end of this video, you'll know how to read the story of price and stop taking setups that go straight into drawdown. Now, here's the problem. Most traders jump straight onto the 15-minute or 5-minute chart. They're marking up liquidity, fair value gaps, and order blocks, but they have no clue where they are in the overall structure. You can't trade the 5-minute if the daily is completely bearish and you're looking for buys. So before you even think about entries, you need to understand where price is flowing. All right, so the first thing I do is zoom all the way out to the weekly charts. I'm not looking for entries here. I'm just asking one question. Where are we in the bigger picture? Is the market trending up? Is the market trending down? Or is the market just consolidation? Marking out the swing highs and swing lows and marking out the fair value gaps. Then I drop down to the daily chart. And this is where I mark my daily structures. When I'm on the daily structure or on the daily charts, I also look for liquidity. I also look for swing highs, swing lows, and I mark them. And I also mark fair value gaps because they play a big role in top-down analysis. I also look for if the daily structure has shifted, if we're approaching a daily high or a daily low, or is there a fair value gap that price could rebalance to. Now, once I've got that daily bias and get to the 4-hour charts, I still look for the same things. I look for swing highs, swing lows, and fair value gaps, and I make sure to mark all of them because all of them play a key role in where price is heading to, where price might go, or where price is right now. So we mark out our swing highs, we mark out our swing lows, and we mark out our fair value gaps. All right, so now we go on to the 1-hour time frame. And on the 1-hour time frame, we see how price close or reacts to the certain levels. We see how price reacts to the weekly levels, the daily levels, and the 4-hour levels. And depending on how price reacts to those levels is how we look for our entries. So on the 1-hour time frame, if price were to react to a 4-hour fair value gap, we look to see if we have a good closure or a good rejectional candle on the 1-hour time frame. And if price were to go to a 4-hour low or a daily low, we look to see how the 1 hour gives a good enough rejection from that level. And from then on, we then scale into the 15-minute time frame. And on the 15-minute time frame, we look for a valid entry. So after price has given us a solid 1 hour rejectional close, then scale on to the 15-minute time frame and find a good entry. Either we enter off a good rejectional candle or we can enter off a fair value gap that formed after the 1 hour candle has given us a rejection. So, okay, now let's go ahead and take a look at how I do my top-down analysis. Okay, so starting from the weekly time frame, we look to mark out our swing highs, our swing lows, our levels of liquidity, buy side or sell side, and we look for weekly fair value gaps. So let's go ahead and mark them all out so they can be visible and clear. So we have this weekly buy side, and we have this weekly sell side right here. We need to get the most visible ones out. So knock that one out. Now you have weekly, weekly sell side, weekly buy side, weekly sell side, weekly buy side. Sorry for mistake. That's weekly sell side. Weekly sell side also here. Weekly sell side. Okay, so it looks like we have all of our necessary weekly buy side and sell side liquidity areas are marked. So now let's look for fair value gaps within the weekly time frame. So we have this one right here, clear visible one, weekly. And that's all of our visible weekly fair value gaps. Now that we've marked the weekly time frame, we can scale down and go to the daily time frame to mark out our areas of interest. Okay, so now on the daily time frame, we start from over here. We have our weekly, our daily buy side. The next daily buy side. Next daily buy side here. We have some daily sell side levels, daily sell side. We have daily buy side. We have a next daily buy side here. And now let's re-go over to mark out our visible fair value gaps within the daily time frame. So starting from the left, making our way over to current price. So we start here, daily, give a next fair value gap here. As daily, we have a next fair value gap here. As daily, give a next fair value gap here. As daily, the next one here as well. And a key reminder that the fair value gaps that we are marking out should not be touched as of yet. Like price should not be able, or price shouldn't have already tapped into that fair value gap. We only marked out untouched fair value gaps because they are valid areas. All right, that looks like we've got all of the daily areas of interest label. Now let's go ahead and scale down to the 4-hour time. And now we start from the left, making our way over to the right. We have 4-hour buy side. And next, 4-hour buy side. Now bear in mind, once price or once the higher time frame fair value gap overlaps the lower time frames, like for example, you see how this daily fair value gap, but within that daily fair value gap has a 4-hour fair value gap. The higher time frame is more stronger, so we don't have to mark the 4-hour time frame fair value gap also. Okay, we have 4-hour buy side. Next 4-hour buy side here. And we missed this one here. The next one here. and the next one here. And then we have several in between here. We have a 4-hour fair value gap here. And now let's go to the swing lows. We have a sell side liquidity here. One here as well. One here as well. Now, once price is within the higher time frames fair value gap, you do not have to mark out a swing low or swing high once it's inside of the higher time frame fair value gap. Now let's scroll over and mark out our levels. We have a over here for our buy side. You have a next for our sell side here. You have a for our buy side here as well. You have a for our buy side here. We have a fair value gap here. We have a for our sell side here. And one here as well. Okay, so now that we've labeled everything, you can go ahead and scroll down to the 1 hour to see how price reacts to certain levels. So let's go ahead on the 1 hour. All right, let's go ahead and see how price reacts on the 1 hour time frame to find our bias on whether or not we should enter a trade or not. Now, let's go ahead. A candle forward, and we see price gives a rejection here, but we're not anticipating any trade because this isn't within our time zone. On our time zone, the trade will be from 7:30 to 1 o'clock. And I'll put on a time-based indicator that will show us when we will be able to look for certain trades. So price wicks into these two, but we're not looking for those because we're not looking for trades during this time zone. So let's fast forward the next candle. Now we have a next projection within the 4-hour fair value gap. And this is the 6 o'clock candle. Now, our time frame to trade from is 7:30 to 1 o'clock. So we can scroll down to the 15-minute time frame to look to see if we have an entry confirmation or any entry signals within our time frame. So we fast forward candle more, and as you see, the highlighted section, that's 7:30. Now we can look to place a trade. And we have a valid, nice bullish candle to enter off. And we can place our stop loss right below this low. And we can look to target the 4-hour buy side liquidity high. And let's go ahead and see how price plays out. And just like that, price goes straight into profit. right, that concludes the breakdown on top-down analysis. If you found this helpful, please like the video and consider subscribing to Trading District for more structured trading education. Thanks for watching, and I'll see you in the next video.